Yo, what up traders? Your boy Martin from Affinity Markets, and today we're going to go over the topic of understanding your position in the market when placing take profits and stop loss. So a lot of new traders been struggling with placing their stop loss and take profits overall. So first thing I would say is understand your strategy and where you are in the market, because number one, sometimes the market may be bullish, but then people just tend to place a stop loss any random place and they take profits, try to gain 200-300 pips. No, like, for you to gain that amount of pips, it's impossible, but it's still possible. But it depends on the market momentum, on the movements of the market. Also, place your stop loss where it makes sense. A lot of you try to place a stop loss where you be like, oh, you want to risk this amount of money, you only want to risk $3-5 to make $1,000. Like, that's not possible, because you're just gonna keep on getting stopped out every time. Because what if your strategy, you're risking 1% to gain 7%? Like, to me that doesn't make any sense, because you're just throwing your money away by just being cheap, you know what I mean, and being uptight. And when you be uptight, you're just gonna lose everything. That's my view on that. Like, placing your stop loss like that, because it's just unnecessary. Placing your stop losses where you're just going to be losing every time. Like, it doesn't make sense. Like, place your stop loss where it makes sense. That's my best advice. And today we're going to show you guys an example and go over how you can go about placing your stop loss. Depends and based on your strategy, but I'm going to show you an example of where I would be placing my stop losses in certain positions, you know what I mean, and my take profits. So first and foremost, I normally start by looking at the chart. What I do is analyze, right, and look at my market structure, because you know your market structure is important. Because once you know where you are in the market, you're gonna know where there's high possibility that price is gonna retrace back to certain zones or areas in the market. So with that, you can already consider where you're gonna be placing your stop loss, take profit, etc. So I will look at my daily, and if you look at my daily, my first thing I will do is look at my structure, as I mentioned previously. And you can see my structure, we're in a bullish market, because you can see higher highs and higher lows. So we are seeing impulse correction towards the upside. So what I will do in this scenario is I will mark out my highs and my lows. So my highs is right at this point, right? You can see that's our high, and our low is at this zone, right? So where we have our low, you can see we have two lows in this area, and I'll show you the reason why. You can see where price came back, and we have this major support around that area, so you can still highlight that as another major support area. What I will do now, I'll work my way back down, which is to my lower time frames, which I'll be going to my daily, right? So when I go to my daily, right, what I will do now is look at my structure again, and you can see now on your structure, on your daily, right, you're seeing more candlesticks. So you can see straight away we are in a bullish market. We are having a series of higher highs and higher lows. So first and foremost, in this scenario, what I will be looking at right now is my candlestick, because now I can see we are currently at a major resistance. So if you go back to our weekly, you can see we are at a major resistance where price have been respecting, right, and rejecting. So however, I'm not sure if it's going to continue that way, but with this scenario, what I would say for me to confirm any buys at this point, I will be looking for a break above, right, and retest. If we have a break above this resistance area, because you can see price has just been rejecting, and it's all with the wick. You can see all the wick coming off that major resistance, and a perfect example look like we have something similar coming within this resistance. So that's me understanding where we're at and what price action is actually doing and what the market is actually telling you. It's clearly and simple as day. Like, it's in front of your face. Pay attention. I would only enter this trade if price break above and retest, right? Once it's retest, this is when I'll be going back to my lower time frames to actually look at what my candlesticks are doing. So with that way, I'll start considering where I'm going to place my stop loss, how much I'm going to risk, etc. Because putting on a big lot size and trying to gain what, 1,100 pips, right, and trying to risk say 5 pips, you know, with what, 5 lots, like that doesn't make sense. You're just gonna keep on getting stopped out every time. It doesn't make sense. So adjust your risk and place your stop loss and take profits where they actually make sense. So back to my daily time frame, we can see on this scenario, if you look at what price have been giving us, is a series of higher highs and higher lows towards the upside. So I'm going to highlight some of the highs and lows within this area. So let's just highlight these areas so you can see we have our lows. So that's our next major support area. You can see again we have another supported area right there, you know. So in this scenario, right, I'm going to replay the screen, right? So I'm going to show you guys something so you can see we can have a trend line pull from that low to that high, right? So what I will do now is I will replay my screen and I will show you guys where I will be looking to place my stop loss and take profits. However, I will be working my way down to my H4, you know, because I'm a swing trader, so I will be looking at more candlesticks. So now we're back to our H4. What I'll be showing you guys is areas and zones where I will be placing my stop loss and take profit, and I'm going to explain the reason behind why I would be actually placing my stop loss and take profit that way. So you can see straight away, right, we have these major areas where we had this massive bull run and then we had this drop. So you can see straight away we had this break, right? Within this area you can see price, we had our highs and then we had our retracement towards the downside. So what I want you guys to pay attention to in this area is your candlestick analysis. So if you look at your candlestick analysis, you can see bullish engulf, you know what I mean, you can see dodgy candles, etc. So first you can see price have been respecting this area, hence why you see I've highlighted it. So we're gonna put this area in red. So where you see I've highlighted this area, now we can see how price have been respecting this supported area, because if you look at previous market structure, right, and price action, you can see this area, you can see we had a push high, retest, push high, right? We came back down again and tested this same area around this zone right there. You can see that. So you can see price went up, came back down, test, and then break above. And if you can see now, price is actually doing the same thing. The similar thing is happening in the market, right, in the future. So you can see right here, that's exactly what price been doing. So for someone like me approaching this market, what I would have done is I would have came to the market, right, and I would have marked this high, right, which is our last high from this small bearish move, right, and then I would have marked my low. So I would have marked this previous low. With that way, I don't need this rectangle to be on my chart. So you can see how clean my charts are looking at the moment when I remove my rectangle from off the screen, right? So after I've removed that, you can see how clean my chart is. So all I have is my high and my low, right? And all I'm looking at is my candlestick analysis in this scenario, and I'm going to be showing you where I will be looking to buy and sell this current market. So you can see what happened is that price came back down, right, and you can see we failed to break this low. So straight away there, we can see we have something like a up, down. You know, we're thinking, where are we going to be heading next? Remember, you want to buy low, right, and you want to sell high. So in this scenario, I would be actually considering me to be looking to buy low. Remember, if you look at the market structure as well, you can see we have our next resistance back into 1961. So with my take profits, I'll be looking at these areas to be going to the market. So my stop loss will be just below this current low. So you see this low that we have right there, that first low, is where I'll be looking to place my stops. So the reason why I'll be placing my stops below that area, because once price break and close below this area, then we can possibilities that we're going to be looking to sell back down into these zones. So I'll be coming to my chart and I'll be looking at this area, this specific area, because as I said, that's my point of interest. That's what price have been showing me. So price have been showing me my highs and my low clear as a day. So what I will do now, I'll come to market and I will be looking for my entry point within this area, because again, if you look, you can see clearly we had this low, we had this high, we had this low again, this high, this low, failing to break again, which was twice, and then we had that push, and then we are looking at now a small term retest. So with this small term retest, what I would say is, if you go back to your 30-minute time frame, right, so we are still on our H4. So if you go back now to your hourly, right, and your 30-minute time frame, that's where you're going to be looking at more candlesticks, and you're going to see a clearer retracement. So you can see we're on an hourly time frame. If you go to our M30, then you can see clearly the market is in a retracement mode. So you can see all this, which had that push, we had that retest. So if you go back now to your hourly, which is where I'll be looking at my entry point, is somewhere back in this area, because you can see clearly we just broke structure. So now that we actually broke out of this area, because we just broke this structure, which was this previous high, so we can be looking for some retracement before we continue long back into this zone. So what I would have done, right, is come to the charts, then I would have been looking to look for entry point somewhere within this area around 1828, because as I've mentioned previously, we just broke structure. When we broke structure, all I'll be looking for is a retracement, right? Understanding my candlesticks, where they are, what price is showing me. So your doji, your morning star, evening star, etc., bullish engulf, and then I'll be looking for my take profit this week. With my take profits, I'll be looking at my wick, so my previous wick. So what I would normally do is I would be looking at these previous wicks. So you see like these wicks, because something I've noticed about the market is always retracing back to the wicks. So that's why I pay close attention to my wicks. So I will look at my higher time frame, which is like my H4, and I'll be looking to place my take profits within these wicks, because I'm a swing trader. So I would be looking to hold my trade for quite a long while. So my TP1 would have been right in this area right there, because the reason being is I have all these wicks. You can see how price have been reacting in the market as previous. So that's the reason why I will be looking to place my TP1, because there's a high probability, that price is going to move back there, and also it's a high probability setup, because one, you had your break retest now, so we'll be looking to go long. So H1 time frame, and then TP2, as I mentioned, you're going to be looking at your TP2 should be somewhere around these wicks just above, because as again you see how price been reacting. So if price break above, right, your first take profit, then there's a high possibility it's going to go back to these previous wicks that we had before, because that's another major resistance zone. So what I would have done is put my TP2 within that area. My take profit tree would have overall been this high, where you see I have my orange trend line drawn across horizontally on the screen. So that's where I'll be looking to place my final take profit. On my 30-minute time frame now, I would come back, right, and let's play and see what we got. So you can see price is moving along, and we're just testing to see where price will actually move towards, if it's going to move in our favor or if it's going to move against us. Because remember, I've said before, you want to make sure, right, that the market is moving the direction you want it to, because when you get your entry point, you're going to place your stop loss where it makes sense. In this scenario, we just broke structure, right? So with my stop loss, I've placed it just below where we broke structure, because sometimes the market can retrace back down to these areas. It doesn't always have to. Once it's giving you this high, this low, and that high, the market doesn't always have to come back to the exact zone that it retraced back to previously. Always bear that in mind. So you can see my stop loss came in at this low where we had faced previous week, where we had a massive bullish push towards the upside. There's a high possibility, right, that price is going to just continue once we retrace and retest just above this area, because you can see the strong bullish move, which tells us that strong buyers are in the market. So let's continue and play and see where price is going to break out to. So you can see, boom, straight away we had a massive move towards the upside. So you can see straight away, remember I said to you, you're already seeing this candlestick. Look at these massive bullish engulf. These already represent strong buyers in the market. So once you understand where you at in the market, that's how you're going to take advantage of it. Because look, you can clearly see after, right, we had this massive candlestick push towards the upside, we had a retracement, look, and price is just consolidating a bit, right? This is what you call liquidity building up in the market on the lower time frame. Sometimes you go on your M5, you might see a bit of accumulation, etc. So if you look at where I've placed my entry point is on my retracement zone, right? And also I've placed my stop loss just below this massive bullish candlestick. I didn't came and try to place my stop loss just below this previous candle. No, that doesn't make sense. Like, place your stop loss where it makes sense and adjust your risk, and you're going to see how beneficial it's going to become in the long run. Peace out.